Another stock which is not doing too well today is JSPL. The company's Q3 earnings were disappointing for the street, with the stock now 10% down. Why is JSPL being punished by the street today, Mihika?
So the stock is down 10% on an intraday basis. It's the steepest fall it's seen since June 4th of 2024. Now, EBITDA did miss estimates by 3%. And this is the first time JSPL has missed its estimates in the last 4 quarters. In terms of your EBITDA estimates, they have been cut by brokerages. Nuvama has cut FY26, FY27 estimates by 13% each. ICICI FY26 EBITDA estimates for JSPL cut by 12%, FY27 by 23%, and MOSL has also cut FY26 estimates by 17%. In terms of what went wrong for JSPL, well, sales volumes did come in lower than expected at 1.9 million tons. EBITDA per ton was down 27% on a year-on-year basis and also did not see any sequential improvement and stood at 11,494 rupees per ton in Q3 because the benefits of the lower coking coal prices and higher steel prices were offset by higher iron ore purchases from the market because the input from the company's captive iron ore mines were lower. And lastly, the main pointer is that the company has announced 16,000 crores of fresh capex. This comes over and above the 31,000 crore announcement that has previously been made by the company, and only 76% of the previous capex has been sent. And as per ICICI Securities, the fresh capex in the current environment with lower spreads could be a key deterrent to the stock performance of the company and can be a key overhang until more clarity comes by.
Yeah, Mihika, the capex is the big culprit. But Bank of Baroda up. Mihika, thanks for that. Now Bank of Baroda up next, and Harsh, looking forward to the conversation.
Well, yeah, we have with us Mr. Devadatta Chand, who is the Managing Director and CEO at Bank of Baroda. Interesting because margins have come off sharply. I'd be curious to understand as to why that is so. And growth is holding up quite well. In fact, better than industry, 12% YOY growth in this quarter. Roughly 3% odd on a sequential basis as well. So very, very healthy growth. Let me first start off, sir, by understanding from you whether this kind of growth clip is sustainable for you, 12% YOY.
Broad number basis, what the bank is working out is to have a sustainable business model, right? If you look at the growth in deposit advances, it's something not only strong this quarter, we also had a strong earlier quarters and consistently for the last many quarters now. So looking at the current scenario in terms of growth of deposit and advances, the growth has been fairly balanced this quarter at 11.8%. And earlier when we had given a guidance on the deposit for the full year at 9 to 11 and advances at 11 to 13. And if you look at the deposit in this quarter, rather we exceeded the guidance. On the advances side, if you look at the component of advances, the retail continue to grow more than 20%, like almost 20% for many quarters now. And that is something sustainable going forward also. Similarly, on the agri and MSME, if you look at the December quarter YY growth, it is almost 200 BPS higher than the September YY. So there clearly we have the traction, clearly balance out the business model in terms of growing faster in these two segments. The only component where we slightly moderated is on the corporate loan. While saying so, corporate loan, clearly mindful of the cost structure happening on the deposit, and typically the segment where we slightly moderated the growth is on the finely priced book, which definitely high quality, but these are typically refi transaction or something of a takeover transaction, right? So there we slightly went slightly moderated the growth. So on a full year basis, if you look at the corporate growth going to be more than 10%. The agri and MSME for the full year going to be 14% or in excess of 14%. Retail continue to grow at 20%. In that way, the guidance of 11 to 13% on the advance side, which we had given, I think we'll be at the upper band of that, rather we'll be in a position to exceed that also. So going by the scenario that prevailing, and particularly this March quarter is something different because there is a liquidity measures, there is a rate stance expectation, and I think these are all positive for the banking industry. And that can typically put us into a very strong growth for the full year also. And as I said at the beginning, we are working on a very stable and sustainable business model. I think FY26 also will be clearly replicating the same growth model for the bank.